Glad to have you back. Now, the Consumer Price Index measures the change over time in prices of goods and services consumed by people for day-to-day living. The index weights are based on expenditures of both urban and rural households in the 36 states. The most important categories of the CPI are food and non-alcoholic beverages, which takes 52% of total weight, while housing, water, electricity, gas, other fields take 17%. And others take 31%. Annual headline inflation rate in Nigeria, that's the CPI, accelerated for the fifth month to 22.22% in April 2023, reaching a nearly 18-year high and following a 22.04% recorded in the previous month. Let's understand this, how it affects the economy. Most importantly, the Naira and Kobo in your pocket. Managing Director, Chief Business Officer at Optimus by AfriInvest, Mr. Ayode Jebo, thank you so much. Good afternoon.
Good afternoon. Thanks for having me.
Yes, I would ask this way as usual. What were you expecting with regards to inflation? Some projected higher than this, but considering the fundamentals surrounding the figures that we got from the NBS yesterday, what were your projections before? The day before yesterday, what were your projections before now, and what are the fundamentals around your projections?
Okay, thanks. So our projection was that it was going to also go up above the 21%, so between 22 and 23%, based on our range. So it's in line because it's really very obvious that there are still a lot of very obvious challenges, especially structural issues that would increase cost, will have cost impact on prices. So it's not a surprise, and we still feel that this may still persist as we progress, depending on some of the quick wins the new administrations identify and start to stabilize. So for us, the outlook is not positive in terms of inflation rate, and the main concern now is that when you saw inflation rate at 22.4%, 24% as at April, means that is just the average. There are some items that might have increased on a year-on-year basis. So inflation is measured on a year-on-year basis, and trying to make everyone understand means that prices of last year, April, was this year April was compared to last year April to know whether things have increased. So it means that in last 1 year, average prices have increased by 21.24% on a year-on-year basis. Food inflation have increased by about 24.6% on a year-on-year basis, while core inflation is also at 22%. So you will see that the value of, on the average, the value of what you are holding has reduced by 22%, while you may have some maybe as high as 100% and some maybe as there's what we call deflation, as the value has increased. So but on the average, it's really concerning. It affects cost of living. Wages are not increasing, salaries are not being reviewed, and prices of things are just going up. So it means that people find it difficult to survive.
That's not a good one. People finding it difficult to survive because on every kobo that we spend now, the inflation obviously has an effect one way or the other. But something is clear to me here, Mr. Ebo, that it seems like the tightening stance of the monetary side seems not to be working. Since May 2022, we've been increasing rates, but it's not reining in on inflation.
Okay, thanks. And I think it's not surprising because we need to understand what is driving our own inflation in Nigeria. Our inflation is driven by cost push. And when we say cost push, it means the cost of production or reduction in production is leading to the price that we're seeing. So when you look at transportation costs has increased, if they are importing due to exchange rates, the inputs have increased. As a result, that is what is driving our own inflation rates. In developed climes that they've been raising rates, it is demand pull. That's like having too much money in circulation. So for them, as a result of increase in rates, when rates of other things go up, it will reduce the ability of people to demand. But that's not the case. And you also look at the impact of that rate hike on fixed income market. You see that the fixed income market rates in the fixed income market has also not moved in tandem with the rate of the MPR, which is currently at 18%, because other factors, liquidity has an impact. We've all been talking about the securitization of about 22.7 trillion. The amount of money being printed would also have impact on available liquidity, which would impact on the fixed income market. So I'm not surprised in my own view that I'm not expecting the increase in the the increase in the MPR, that's the monetary policy rate, to translate into increased rates in the fixed income market or to rein in inflation, because I don't see any major correlation given the Nigerian peculiarity.
Let's talk food here. We hear that even across Africa, like 130 million people have the threat of not getting food. And food is one of the major drivers of the hike we have in inflation at this time. Do you think that will change maybe when we get to the harvest season and all of that? Insecurity is still worrisome somehow.
Yeah, one major factor that is affecting it is insecurity, and which is affecting production. And again, for Nigeria, as production is even reducing, there are a lot of things that we've also banned. Yes, thankfully, the land border was reinstated. The closure of the land border was taken off. But that is a demand and supply thing. So I feel that some of the quick wins that we may enjoy with this new administration is if they're able to dialogue and able to focus on reducing the insecurity in our system, in the country. That in itself, if people are able to go to farm and their farm produce, they're able to harvest it, that would help significantly because production would increase, and as a result, prices will fall. So, and this, I believe, is more of in that dialoguing as well as sending a major signal. It doesn't require a lot of money to solve that problem. So, we are able to fix that. That will really help food inflation. You know, part of what also has to food inflation is the transportation cost. Like we always say, it's cheaper to bring in a container from China to Nigeria than take a container from Lagos to Kano because of the logistics. So it's like we are paying for those inefficiencies. So if we can be able to take out all these inefficiencies, it means that cost of production, food production will reduce, and as a result, we will have more. People will be able to demand for more, and that will indirectly or directly create jobs and reduce insecurity in the long run because people will be occupied and they will make money.
Mr. I don't know if you agree with me because price of gas, petroleum products, airfare, lubricants, even transportation across the country, and we know what's happening to the price of diesel and aviation fuel. All of this are hitting hard on inflation figures. But some still say that the problem in this country with regards to inflation has to do more with the structural factors. Do you agree to that sentiment?
Yes, you know, I mentioned that it's more structural related factor. So that's cost push. So when you look at transportation cost is a major cost. People also self-generate their power. It's a major cost. An average cost, depending on the industry, can be as high as 30 to 50% of the cost. Power can be, energy cost can be that high, depending on the industry. So that's really very significant. And other sources, yes, we can see that power is stability is improving, but you see generation is not increasing as expected. Distribution is not increasing as expected. So if we don't fix the power issues, people will be paying more. And they pass that cost to the consumers. So we have to pay for all those inefficiencies. If we have a viable rail system, we shouldn't be seeing trailers moving things from Kano to Lagos. It should be done by rail, and that will be cheaper. So these are some of the things that if we don't, they are not new. It's about our ability to be decisive, to see that we want to fix this problem and focus on it. It will not even take a long period. Within 2-3 years, like I would always say, all this technology required are already in existence. If we're able to fund it or hand it up to private sector to take care of it, and they are sure they will recover their money, and the PPP arrangement is watertight, the population is there and people will be able to make their money. And at the end of the day, we'll be able to pay less for some of these things that we're paying a lot for now.
Beautiful. Thanks so much for adding to that submission. Made it clearer, and I'm sure our viewers would have picked up that point. Let's wrap up on this note. We expect, should we say the last MPC meeting, yes, before President Buhari hands over to the president-elect. There's supposed to be an MPC meeting for next week. What are your projections? What is your outlook? What do you think would happen at that meeting? Do you think there'll be a retention or another shift?
Okay, thanks. I think that there will be another shift, given the stance that the committee has been taking, because inflation has not slowed down. However, my view is that even if MPR is increased to 20%, that would even be affecting inflation, because MPR also comes to affect lending rates. So as you are increasing the MPR, it's now also increasing the cost of finance, which will feed into the cost of production, and as a result, impact on inflation. So my home view would have been to keep it at this level now and see if there are other things that can be done, bring down inflation, working with the fiscal authorities. But based on their stance, I would be betting on an increase at the next MPC meeting.
And if that happens, we might still when do you see us having a decrease in the figures coming from inflation as we move on in the year?
Okay, because beyond some of these fundamental issues we have mentioned, sometimes because of what we call the base effect, because we are comparing it to the following year, we may see a decrease, and also as we go into the third quarter to the fourth quarter harvest season, we may also see a bit of decrease. But all these are scenario-based, depending on some of the major stance that the new administration also take, how it will impact on FX, how it impact on petrol prices, all this feed into. But based on current situation, we believe that from like third quarter, we should begin to see moderation based on the base effect and the harvest season.
But something just came to my mind again. 13 trillion naira has been spent of subsidy for 16 years, and we expect Dangote refinery to come on stream anytime soon. Many analysts like you say that is not the end of the whole issue. What's your reaction finally on that?
Okay, thanks. The kickoff of Dangote refinery is not the silver bullet to solving our problem, because Dangote is a businessman. So like the way we also purchase from other people abroad, that's the way the government will have to maybe sign an offtake contract to supply. And they may even prefer to supply directly to some of the major distributors, which will now come back to supply sent to them. So in terms of the impact on, people are looking impact on FX, there will still be demand. Dangote will have to bring in crude. Will require FX to bring in crude. And that means that it will not have much impact in terms of savings on FX. Where we would see maybe I think the solution within that sector is a gradual deregulation of or I'd say a gradual phase out of subsidy that would out of that problem. If not, we'll keep dancing round, because it will be becoming more opaque that we won't be able to understand how everything works. We believe that what we are currently consuming is significant. What is being said we are consuming is significantly higher than what we actually consume because we are funding or subsidizing neighboring countries.
That's a big one. But let's leave it on that note, Mr. Ayodeji Ebo. Thank you so much, Managing Director, Chief Business Officer at Optimus Paya Free Invest. Do enjoy the rest of your day.
Yeah, thank you so much.